Good afternoon, everyone. It is Monday, July 25th, 2016, 5:18 p.m. It is the start of the brand new trading week, and in this video, I would like to break down multiple pairs and just draw my analysis on them. First pair is EURUSD on the 30-minute chart, as you guys can see. Currently, I have a sell set up around 1.09719 area. And I'd like to show how I got that. So pretty much what we're looking at right now is overall the pair is in a downtrend. As you can see, the 200 moving average is pointing downwards, and price is currently in a bearish trend if you look at the overall picture. What I usually do when I trade is look for the overall picture and try to make it work. So here's the problem. When you're looking at this, what can you see? You can see the higher lows and the higher highs, and right now it currently looks like bulls are taking over. And I just want to warn everyone that this is a typical trap. As you guys see, the top is flattening and momentum is getting lower. The candlesticks are getting smaller, and the bulls are not as volatile as they were down below. So I'm still bearish overall for this trend, and for that I'm going to be looking for shorts. My sell that I'm going to be looking for is going to be below the low. Pull up my crosshair, 1.09521. So I want to place a sell stop down below. Okay. So how many pips away is this from hitting current price? 42 pips away from current price. So if price gets rejected from the 200 moving average and does not breach this high up here, then its next direction is to break the low of 1.09687, which is another popular value area, and also breach the low of 1.09547. Once it does that, you guys should be safe to put in your shorts, and I'm going to break down the stop loss. So the stop loss, I'm going to take my Fibonacci tool out, and I'm actually going to draw my Fibonacci retracement. See, many people think I'm going to draw from right here. I can, but let's see what happens. There's by the way, there's many areas where you can draw your Fibonacci retracement tool. It's not just one specific area. In my Forex Academy, I teach my students various ways to use this Fibonacci tool. I could have drawn the Fibonacci from this swing high to this swing low and gotten a similar retracement. I could have done it from this swing high to this swing low and got a very similar retracement. You guys see how the confluence is just always lining up. Look at this. But just to keep it simple in the video, I'm just going to keep one Fibonacci tool. So I have my sell stop below, as you guys can see, the 100. And if anything, I should take it saying 21 pips to 161.8. I want to do a risk reward check real quick so I can see exactly how much I'm actually going to risk. So my target is about 50 pips for this trade, and I'm going to risk 33 pips. I believe that once it reaches, if it goes down, triggers my sell stop and bounces back up and passes the 38.2 Fibonacci zone, the bias is bearish again, and I shouldn't be in the trade. So I'm actually going to place my stop loss at 0.09819 right now. And this is about 33 pips. So for this trade, I want to get at least 33 pips for my stop loss, for my profit. So let me get 40 pips for this trade and I'll be satisfied. I don't want to be too greedy. 1.09088. There we go. And that should be for a profit of $59, 39 pips. And I should update this video eventually when I have a stronger bias later on down the line, but as of right now, you guys can see that I have sells in from my last video of this analysis, 145 pips away, and that was in my last video when I broke. Oh man, I should not have done that. Yeah, hold on, it's not good. Oh, yeah, well, I did not mean to do that, but in my previous video, I broke down the analysis. I'm pretty sure the trend was around here when I showed the video, and it came down and never came back up. And right now, we're currently at 1.09924. The next pair I like to break down is the EURGBP. As you can see, we're currently in a bullish trend. So in the EURGBP, we're looking at the 4-hour. It's currently in a bullish trend. I'm gonna actually put in the moving average, the 200 moving average, so we can get some confluence going on here. Alright, 200 moving average, and it's way up there. As you guys can see, it's nowhere near the 200 moving average. Price is currently bullish. Let's go with the 1 hour time frame. That's all I really wanted to look at on the 4 hour. 1 hour time frame is showing that the price is currently bullish. See everything going on, all the price action. And right now, prices are currently in a consolidation. I like to call this a triangle wedge. As you guys can see, there's a counter trend line at the swing highs, and every time price went near a counter trend line, it kind of bounced off. And there's also the trend line where it's also showing that there's higher lows. So there's lower highs, but there's higher lows. So that's kind of a divergence right there. So what we want to do is go long if it breaches the counter trend line, or go short if it breaches the actual trend line. Now I already have a buy stop in here, and I have another buy stop up here. I'll explain the buy stop up here in this video because it's a lot more simple. The buy stop I have a little lower. I kind of analyzed it in the 5-minute and 15-minute time frames, and that's more advanced. That's kind of day trading, intraday trading, and you know, I won't be able to cover it all in this video. So as you guys can see, at around 0.84915, I have a buy stop. The last swing high was around 0.84760, and it's also in confluence with my 38.2 Fibonacci zone. And you know, my rule for Fibonacci is if the price breaches the 38.2 and goes any higher, then the price is currently bullish again. And I already explained my previous confluence, which was we looked at the 4-hour chart and saw that it was bullish. So that's my main reason for entering that trade. Now I'm going to take a stop loss around 0.83677, So we want to draw and see how many pips that is. So my stop loss is around here for 123 pips. I just believe that, if it breaches the 38.2 again and goes down around the 61.8 and also, gets back into my zone where, the price was currently at, then I'm out the trade and I'm taking a loss of $450. But my take profit, I always try to aim for a higher risk reward ratio. So my take profit is going to be 130 pips at 0.86185 for a total profit of $465. So my current risk reward ratio is 1-to-1, and I do not take any trade unless my risk reward ratio is at least 1-to-1, meaning I'm getting at least one time, at least I'm risking my money, and I'm either going to lose that money or I'm going to make double that money. And if I can look for a higher risk reward ratio, that's better. But 1-1 is my bare minimum. And if you risk less than the 1-1 risk reward ratio, you're pretty much setting yourself up for failure in the long run. Learn about the trader's mindset and how you can actually overcome over capitalizing or undercapitalizing your accounts and blowing your accounts. If you ever wonder why every time you made a deposit into your live account it got blown and you can't make consistent returns, please contact me at forexcapitalmanagement@gmail.com and I will talk to you more about my Forex Academy. Right now it is going for a one-time fee of $500, and I also have a signals group where I call out signals that I see throughout the week. That is $50 a month. If you need more information on that, please give me a contact on my email. And you guys have safe trading. Always remember to use your stops. Do not risk more than 10% of your account on any one trade. And be safe out there.